Nope, nobody. Superheroes. All right. So, um, which one am I seeing? Okay, we here. Let me pull this down. We got our heat map from last week. We had our supposedly NFP week last week. So because we didn't get our NFP, we got a kind of a choppy week, but still pushed up to the upside. We got Wednesday, no news went on Monday, no news on Tuesday. We do have FOMC meetings, which is on Wednesday at 2 p.m. We have unemployment claims, and Powell are speaking on Thursday, so that'll probably be our likely our likely news drivers for the week. Um, if we do get non-farm roll, it's still tentative, but that's tentative based off of whether or not the government opens. Uh, we Our unemployment rate, which is 4.3%. And keep in mind that this unemployment rate is the overall rate. Different groups of people are actually affected by this more so than others. Of course, it has increased. This number doesn't show the unemployment rate of women, doesn't really account for unemployment rate in minority groups. So this employment rate is 4.3 on an overall scale. I think the latest number for people of color, I think this is more along the lines of 7.5, close to touching into 8%. Um, so you have to take this with we always, as as minorities and black people, we have to take things with a little more of an extreme to them because it affects most of us a lot harder and in a more severe way because we already underserved, and this usually hits the underserved a lot more harder. So um, we had to. That's why I'm kind of like pressing that we gotta take this a lot more serious because, like even in Christine's situation, she's seeing that this is gotta be something that you gotta focus on more because we are in a very, very weird situation right now. Um, Handmaid's Tale-ish, to be exact, to be totally honest. If you haven't seen that show, it's probably something you probably need to like just take a look at. Not to be like a um not to be a conspiracy theorist, but just to get some notes on what could potentially happen, Um
Sorry, Cole, what's the name of that show again?
Handmaid's Tale.
Handmaid's Tales.
Yeah,
Okay.
it's on Hulu. It's on Hulu. And I'm not trying to be a conspiracy theorist, but it's just too many things are going on right now that just you know are just not in a great place. I'll say that. So, um, we don't have any earnings this week. Not anything big. I got the earnings on this screen. Probably our biggest earnings is going to be Delta this week. Um, Delta, I do have positions in Delta. I'm actually looking to add on some options. Um, right now, the earnings report on Delta is scheduled for October 9th. So I want to try to get one of the contracts that are expiring maybe the 10th, or if it does give a good run up, maybe the 7th. So I will be looking for us to hold inside of this range. This is the daily chart. and you can see we can look at the monthly. I think we hold where we are. I think we use this. We already traded through this gap from the week from the monthly. If you're looking at this from the monthly view, we have a huge fair value gap that's inverted now on the monthly, and around the center is where this body closed right here. And you see, we pretty much traded through that very, very strongly. And with us going into holiday season, I think this leads us to get a nice little run on Delta. And I think that even if we look at the weekly, you can see we got a weekly fair value gap. We're holding around the middle. We've been pushing up all this quarter. We held this gap right here with this move to the downside and push back up. There's a fair value gap that was on the daily. On the weekly, we held that and we pushing back up. So I think we eventually get back above the yearly opening. So we end up closing on we end up this year above the yearly opening price, which is right around 60.28. So I'm gonna try to size into a position for the Q4 where I want to try to get buys above 57.57. And worst case scenario, if it does come down, I want to see us hold inside of this gap right here. If we do come down at all, I'll still be buying around this gap. Um, Let me put the fibs on it instead, where we have the low at 53.50, 54.11, 54.71, worst case scenario. But the way we closed on Friday, we gapped up and we pushed down and we kind of left a small gap to still kind of get filled. But I think that we're starting to see buying take place with these big wicks forming around the middle of this gap. So I want to try to see if I can get some buys. So looking to see price push up from where we are and take out this high first and get back to the weekly high. But overall, I want to see us above this 63, 61 high right here. This is a previous week high. Want to
Hey,
see
Corey,
at that. Yep.
question. So when we did Apple,
Hmm.
it came perfectly down to our place.
Hmm.
But it did it and my alarm went off and I woke up because I had my phone on loud. Um, but it did it at 4 a.m. So it came and started reversing at 4 a.m. With
Yep.
these, is it okay to get into it at 4 a.m. or do we need to wait till New York session?
You gotta wait to New York because this is options. They only let you buy during the daytime. I mean, unless I might not be aware, but most brokers don't let you buy outside of outside of normal 9 to 5 hours. But if you I think that you can start to get in some trades in pre-market. So if it's pre-market, I think you can get in between 8:30 and 9:15. I think those are hours. You can start getting in at that point. So a lot of times it's easy to just scale in, put a pending order on it. That way you'll get pulled in regardless of when and where because they will buy your orders after hours, but you can't market into a trade. So that's the better way to handle it. Use a
Okay,
pending order.
thank you.
This is what I'm looking at. Worst case, we come down, we sell off and come into this area. If it drops below this, I'll still look at it, but I don't want it to take out this 50-45 low. I don't want it to take that out because I think that if it takes that out, then we looking at going to this 45. If we look on the weekly, if we take this 55 50 45 low out, that mean that this 45 is at risk and coming down into this gap right here. So I want to kind of see us hold up in here. And as far as the contract goes, it's all going to depend on if I decide to go, you know, closer to the expiration, which is the last expiration date that we have is October 10th, right? We report earnings on the 9th. To be cheap, I could be going after this October 10th expiration, which means that I would likely go for the 58 strike price, the $58 strike price, with the ask being $1.83 and the bid being 172. So I could buy anywhere between this, but that means that I'll be spending 100 between $183 to $172 for this $58 strike. Or if I think that it's really gonna move, I could come up around this 62. But all of the volume is sitting at fixed 58 and 60. So the $60 might not be a bad one. Let me screenshot this. Let's do here. So the $58. I also like the I wouldn't even mind I wouldn't mind any of the ones with volume. So 62 is good. Um 60 is okay. Yeah. Any one of these three I would be cool with. This one's thin on the volume, but you can get it at the $67, 60 $65 to $58 price range. You can get these for 113 to $100, and each one of these have volume. So if I do, maybe I'll size in contracts at each price point. Maybe I'll get one at 58, one at 60, and then a couple at 62. And that's probably how I'll look at that going into the week. So let me screenshot this. This is the best way to probably go into Delta this week, where we take a look. And that earnings is the 9th. I want to actually buy some that are further out. Um, and this is gonna be the 10 contracts for at strikes of $58, $60, and $62. Okay. And let me send the chart. Screenshot the chart link. Okay. That's right now the only one that I got on the radar right now.
What is
Before,
10 by 10?
huh?
What is 10 by 10?
10 by 10, October 10.
Okay,
Yeah.
sorry.
Sorry, I'll make it different.
Okay, okay.
You always be catching me on something, man.
Sorry.
You always be catching me on something.
So we're not gonna worry about Apple until earnings week, right?
No, no, Apple's still in play. I didn't get a chance to get into anything last week.
I'm so mad.
Yeah.
I feel like I should have
Um,
took because what I'm doing, Corey, and you can tell me if this is a bad idea, but I'm literally just taking your plays and trading them on foreign exchange.
that's okay. That's okay. It don't matter how you look at it. whether you take it in futures, stocks, options. I just rather you take it in options because you can make more money on the options.
Yeah.
The only reason why I say do it on options because whatever you're doing on forex or whatever, you can make more with the options on that. So that's kind of why I always lean towards the options. Um, Let me open up Apple. Apple. We kind of still like at the same levels, honestly. Um, we did push up a little bit, but we didn't take out the high. Oops. Apple here. So we said that we would drop down. We did slightly. We didn't. That's why I didn't get into. Well, that ain't the only reason why, but the reason why I didn't like really pay attention to it too much, because I didn't get the drop I wanted. I wanted this alert. I wanted us to try to get back under 250 again, but it didn't. It just kind of went stagnant, and then like Friday it pushed up. So it's really the same targets, like and then once we break this high, this is all-time high. So once we break that, it's really you got you got nothing stopping you from break after you break this high to get to 275, 280, even 300, honestly. Because that's really where it's probably gonna go, 300. Um, I think that the holiday season will get us there at some point, but I just wanted to see us drop before we do it. So maybe I'll just go in with some partials. I don't remember the contracts. Let me see let me look at my phone and see which expiration date we were looking at. I definitely need to I need to preach. I'm preaching to you guys, but I'm just gonna start going in with smaller size just to get my trades in. So and that Apple, let me see, Apple, where are you? You are, there's Riot. There is Neo. Oh man, Neo ran. But
Neo and Raj happen same thing.
yeah, they all ran too, man. That's the sucking part about it. So it's the
App-
31st. Apple's October 31st contract. It was the 280 price. Um so actually, yeah, this is still in play. It's actually still in play and it got cheaper actually. So I still may look at this. This was the contract for this. It's lost a little volume. I would say this is still in play. And I will likely grab some of this on here. So Apple still in play. And it's the October. Let me copy that. So we got Apple still in play for the 280 contract on the expiration of 1031. Their earnings report is 23rd. So yeah, this will be after. Now, I'm not sure how they are liking the new iPhone. It's not doing as good as they have projected. Um so with that being said, I don't know if we get the earnings release that we think they will do, but I think they still will get some sales based off of holidays. So this may not be the best of the best. I'll probably give this a C grade setup, but um, you know, it is what it is on this. Cause Apple's a good company. I think they doing more in subscriptions. I think I heard Earn Your Leisure talking about it too. They don't really. I don't think they're really great on it as well. But because even if we look at when we went over this the couple weeks back, the expiration for the 31st, um the 280 contract, it was 230 134. It was 134 and it's 127. We lost 7 cents on that already. So we would be down 70%, if we had it, like taking that. We'd be down 7% on this already. So, that kind of gives us even though we pushing up, we still would have been down on the options value. So that means that a lot of people are cashing out on this. So um that could mean that they don't really have the confidence in this actually being a great buy right now. Although with us being right here at these highs, even if it's a bad earnings report, I still think we take this high out and try to get 275 at least. Try to get it. Whether we stay above it, I don't know. But at least if we get in, we get our move. Even if we do just get to 272, 275 area, that is still 6%, 70% gain. So, we can still get a decent amount out of that trade. So I like this still. Let me send the chart. So maybe I'll just do one contract on this just to get in something, but Delta will be my focus. We had Neo, man. It ran. This one ran from last week. Uh, I was definitely thinking we were gonna come down a bit more. We didn't. We just kind of just ran up. Um, I didn't have an alert on this one, and I think that with us coming into this price gap from the monthly, I think we do get a retracement, but I don't know. We could come back into this and hold. So I don't know how we actually play this out. But I think our setup is still in line with this. So if we do come back down, again, maybe we tap into this monthly price gap to take out the liquidity that they left behind here and here. And then we try to get a buy. But we do have this price gap right here. And then we could always likely just run through this level because we got a high above here. Let me make this bigger. I think there was a high over here at $9 that we could be coming after. But Neo, I still think it's ready to push up some more. Um, we already tapped this 771 high, which further explains why it could go up higher. And then we can push this over some more. What I'll be looking to see, if we start seeing price close and hold above 787, that's a sign that this gap might get filled, right? And so at least if it gets filled, I'll at least expect us to push up to that 863 price because that's the high of this price gap. And at least, we'll challenge this 825 area. So if we don't get a push to the downside, I think we can start looking for buys above 787 on this. If we start to fall off, we can try to buy again down here in this gap. And really, this whole thing is a fair value gap right here. We can start looking to buy down here. And I like this little gap right here specifically. Down here between this 730 and 721 price point, but the middle of the fair value gap is 737. So I'll set an alert here at 737. No, let's do it here right at the break below 750. So that's my first alert. And then if we don't trigger this, I'll look at 787. So that's what I'm gonna look at. And then the contract on this Neo. Let's clear this out. And we had the contract on Neo was, let me find that one. Neo. The contract was the May 15th. And that May 15th contract that we were looking at was at $10. It's already gained. It's already like if we had went ahead and bought in last week, we would already be up. This same contract last week was 96 cents, 94 cents, between 96 and 94 cents. We would already be up almost 40% on this. 40. So let me see. If it was at 90 and it was at let me see, 704. 704 last week was here. We closed here. 704. And we peaked here. We would have already been up about 100% here. We would have been up 100% by at some point last week. We would have already been up 100% on this. And where we closed out around 770, this would have been up 90% already. So we missed out on this one. And I don't want us to miss out on this one again. So I still like this make contract. Could even go down to the $8 contract on this. So Neo on the May 515. May 15 contract. If you want it, and then sometimes I just try to take where I think like, hey, I think we're gonna take out 10. But there's no reason why you wouldn't go 12 or 11 or something. But there's volume on 10, there's volume on 8, there's volume on 9 as compared to these two. So maybe you want to go to 9. But I like the 10 and the 8 for sure. It's cheaper to get the 10. It's even cheaper to get the 12, but there's no volume on the 12, no volume on 11. So could that play a difference in the why you would get that? True. Yes. So I'm liking the $10 strike and the $8 strike. Oops. And here's the chart.
How do you draw that box around that green one in chain?
Oh, I'm just using the Zoom tool.
Okay.
Yeah, I'm just using Zoom, the annotation app on Zoom. Um the other one we had Baba. I think JD is gone. JD is gone, man. JD is gone, bro. Like I'm mad I missed JD. JD from last week, gone. We already ran on this one. We didn't really get any. I thought we would take this low out, but we just opened up and ran. Um, we were looking. I don't remember what contract we was looking at, but that one's. I don't want to touch that right now. We do have earnings come up. I would love to get a retracement before earnings on November 13th. So if we get any retracement, um, I'm gonna just put an alert below the last candle because I want to see us get a retracement. If we get a retracement, I'll start looking for contracts to get in on JD. See this $40 contract. That one's expires November 7th. That one's 90 cents. The expiration is the 13th. What is this one? So the contracts are cheap. Everybody's liking this $40 price. So that tells me that either it's going to sell off there, but it does imply that we are probably, whether it sell off or whether it buys, it's implying that we do at least try to get to this $40 price. Let me look at the weekly. We got a high right here. Give me this weekly high. There's a gap right around this $40 price point. So I think we are definitely going to at least try to get back into that $40 area. And we got this as huge as this big fair value gap on the weekly too. That's overlapping all of this stuff. So that explains why we getting this rejection here and here, and why now if we go back into this, we know, okay, we came to the low, we near the low. We probably will try to take the midpoint, which the midpoint is 39.38. Why wouldn't we at least try 40? So um the weekly chart looks like it to be the best. Now, again, I would love to see us retrace a little bit. And you can see we got this gap right here as well. And I would like to see us like challenge that too. But if we don't, I don't mind trying at least getting one contract near these highs and see how it play out. But overall, I think we do get to that 40 point area. So I'm gonna send a weekly and a daily chart for this. This is the weekly. No contract yet, but this is one I'm looking at. No contract expiration yet, because I don't know which one I want yet, but this is one I'm looking at. The other ones, Baba. I don't want to touch Baba right now. Neo Riot is gone, man. This one, man, Riot is gone. Like it's already near the highs. Um, only thing I'm seeing, maybe we come back down. None of the plays we had retraced. They just bought. So I didn't really get a chance. Another one I've been looking at is Irene. Irene, I was looking at down here, near these lows over here. It's gone. So I won't even be touching this. Like, look at this thing. Straight up, man. This is crazy. Straight up, we missed that one. So I can't touch this one. All right, so now we can go into the futures. Can come out of here. Dollar. Let's start over here. Dollar. I already pretty much marked it up. Last week was Um, this was last week. The main thing I was looking to see if that we pretty much held this fair value gap. We did dip below it and down into this one, but the overall gist of this move was that we didn't sell off hard. Like we didn't really sell off in a major way. And that's what I was thinking, that I thought we would hold up here. We didn't quite hold up here, but we didn't sell off either. So if we go and consider what we were looking at last week's chart looks like this. Hold on, I can pull it up. Let me pull that up. Mm, 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 mm. Dollar, copy link. Last week was, pretty much if we held this area that we are near right now, that we would push up. And we kind of held this area. We did slip into this fair value gap. And this the other option was that we fell down into this one and push up from there. We kind of just dipped down into this area and just held. We kind of just dipped down into this and just went sideways inside of here. But I think overall we still end up pushing up at some point. Like maybe if we get some news about the government open back up, but I think that'll be kind of where we hold. So this is what I'll look for us to either push up from here, come down into this fair value gap, or hold inside of this one. Or if we decide we want to sell off, we go ahead and trade through these and use one of these to sell off to get down to this weekly fair value gap at 95. We already took out this low we made over here. This low we still got holding right here that we just made. So that's kind of why. If we do push up, we take out these equal highs right here and then come into this fair value gap. That'll be the next thing if we do push up. But right now, I think we need to deal with this area and these highs. If we do push below, we'll deal with these lows, this low, and this low. That makes sense?
Yes.
Gotcha. Gold. Gold is similar right now. Like last week, we were looking at this on gold. We were looking at this on gold. We were looking at if we came down, we would pretty much hold inside of this area of accumulation that we have right here, and then push up, to take out this 38.24. If not, we would sell off to take this low out and come down into this order block, this golden area on the fibs, and then hold and push up from there. We kind of did a little of that where, let me see what that's the 1 hour chart. 1 hour chart. Okay, cool. We kind of did a little bit of that, right? Where we pushed down somewhat, right? We pushed down somewhat, but we pretty much sold off a bit and then just ran up. We just kind of ran, So comparing that to what happened last week, right? We barely sold off and just kind of pushed up and went ahead and took out that 38.24. So with us just not really getting any retracement, you would have had to come back in on either this drop or this drop to try to get in some buys on that. I think Christine, you had a good setup too. So at this point, we made a new all-time high. We got equal highs over here as the new all-time high. The next level we target is the new fresh all-time high. Then we got 39.75 area. We got 39.50 area. So those could be targets. If we do get a retracement, there's an inverted fair value gap that's already been traded through right here. And we can use that same thing to buy up from there. So we can start seeing price hold at 38.98 or come back down to the monthly. There's an order block right there. There's this 38.83 area. If we do push down, we can see price hold from there, but we probably take out these highs first because they so close. And if we do get a retracement, it's going to be because we see something happen in dollar that push dollar up for some reason, which is in an area that it can buy from right now. Dollar is in an area where it can buy from because we inside of this fair value gap right here. We could see dollar push up from here. And if we do start seeing dollar take out some highs, that could be our signal to start getting ready for gold to sell off a bit so that we can go ahead and get in some buys because I think we still gonna go ahead and hit 4,000. It's too close for us not to. It's way too close. We already been in the 39.22 area, pretty much 39.25 already. We only, a couple we only a couple points away from 4,000. So I think that's still the goal at before we get the year out. If government shutdown continue, I think gold will push up even more. So that'll add on to what's already happening on gold.
I'm just where I'm stuck at is the sell off. It's like I don't think, not I don't think, but it doesn't. I don't know how to react and get into a position if we don't sell off. That's my thing.
Hmm. Well, if it depends on you know, inverse correlation with dollar. That's how
Mm-hmm.
you time it. You just got to time it with the inverse correlation. And I think that the divergence between gold and dollar, you got to really just pay attention to that, right? Because let me put them together back to back. Because you know that they're going to move opposite each other.
Correct.
We already know that. And we already know that because it's going to move opposite, that if we get a high, let me change the contract on this. Mhm. Okay. So we just got to look at it from an inverse correlation standpoint, right? If we know that on whatever day this is September 25th, right?
Mm-hmm.
Dollar made a high. September 25th, gold made a low, right? If you don't get in on that day and we take out a high on gold and dollar takes out a low, then you know that the next day we should be setting up for a continuation. So that's how you got to look at it. You got to kind of step back and look at where your highs and your lows are in comparison to the pair, right? And then you take that information and just use it on the lower time frames, right? It should be a high and a low at the same time. It should be a high where there's a low on gold where it is on dollar. So if we thinking that, all right, there's a high right here on Thursday, there should be a low over here. And if we seeing that dollar giving us a reaction, we should know, all right, if dollar is at a low and we getting a reaction, we should get the opposite reaction on dollar. I mean on gold. And we have to step back from the smaller time frames a little more. Like only get the entry from the lower time frames, but your idea and your concepts of what you need to be looking at need to come off an hour and above at least. And I'm gonna send y'all this video from and I told myself I'm gonna review this too, but it's a video from Jade Capital. And Jade Capital, he's got like 2 million, over 2 million withdrawals from Apex, right? And he posted this really, really good video on Instagram. Let me find it. And I told myself I'm gonna review this too. It's stuff I already know, but and you all know it too, but it's just like applying this, right? And he basically reiterates how you need to look at oops, wrong setup, wrong thing. So it's this one. He basically reiterates like, let me screenshot this. And I'm gonna send this to myself so I can open it up.
He have how much withdrawals?
To over 2 million.
Oh my gosh.
Yeah, over 2 million. But he trade the same way. Like he trade like I do, like Anna do, like how I be teaching y'all. He trades the exact same way. So it's like I like to hear that, it's not again, it's not about what we don't know. It's about the discipline to apply it. So it's like, bro, like just do the right thing and just do this, man. Like you all know how to we all know how to do this. Just do it. So um let me I just sent it. Um
Ignore that text, Corey. I was just
oh, it's okay. Yeah, I figured you were just sending it to yourself.
yeah.
Um Dang it. Okay, here we go. And basically, it's just a reminder to kind of focus on your levels and your setups, right? If you're getting a setup and you see it's coming off the daily chart, go to the 1 hour to get the entry. If you get a 4 hour setup, go to the 15. 1 hour, 5 minute, 15 minute, 1 minute setup. And simple as it sounds, right? I think it's just like certain concepts from like basics we need to like really kind of focus on, right? So if we seeing that, again, this is the 9 o'clock candle right here, right? The 9 o'clock candle on dollar, right? We know we at a low. We see we holding the low. We know we at a high. Seeing that we at a high, we on the 1 hour chart. 15 minutes says, I mean, 5 minute charts tells us on this same day, hey, we at a low. Which day was that? This is Thursday. Hey, we at a low at 9 o'clock on the 1 hour. Navigate to the 1 hour, I mean, to the 5 minute from the same time frame. The setup so obvious now, right? So there's a fair value gap 6 a.m. on dollar that's getting held, right? At the same time, 6 a.m. Candles over here, and we starting to see price push up. We get an inverted fair value gap set up. You got your entry over here at 9 o'clock. At the same time we getting this entry, we seeing dollar already blowing away. And we would have even had time to get this set up from gold to take the sell off while we already see dollar proving that it's pushing up. Right. And he really break it down in a way, hold on, like that we can, we need to reiterate to ourselves to follow. Like if it's a 1 hour, 5 minute, if it's 4 hour, 15 minute, if it's a 15 minute, 1 minute. And it's all gotta be like followed through our process that we make sure like, hey, we already see it's 9 o'clock right here. Gold is at a high, dollars at a low, and it's already proven that it's going away from the low. It's pushing away from the low already at the same time. So this candle at 9 o'clock, at 9:30, at 9:30, right, on gold is at a high. At 9:30 on dollar, it's pushed away from the high and through a high, right? So that means that if I'm pushing away from a high and through a high, that gold should be selling. So at this point, I don't need to look for buys on gold no more, right? I need to be looking for my shorts. And if you doing that and you analyzing it from that point of view, you know to take this short and at least target this low. Because if you're shorting up here and this is your main area of liquidity for the day, you do end up taking out this level. You do end up taking out this level, and you come down into this level all the way here. But even if you don't do nothing but take it to here, from here you already made over. You made your daily goal. I already know you have. Just like going into next week on YM, NQ, and ES. You can look at gold. I'm sorry, you can look at dollar, but you can also look at the divergence between the actual indices, right? So if gold, I mean if dollar making a high, the indices should be doing the opposite. If you don't want to look at indices and dollar, you can look at NQ and ES, right? It should be the same thing, right? If ES is making a high, ES made a high, and Q should be making a high. And if we don't get a high, that means that NQ is probably going to sell off. So this high right here at 6 a.m. on Friday, if you're looking over here, this is my ES chart, right? While NQ is making this high and we don't get a new high, ES makes a new high right here. So on the same day, when ES makes a high here and Q makes a high. So let me just point this out. This high is the 6 a.m. high on ES. This same high is on NQ right here. So we get a high on NQ and ES at the same time. Now, both of them sell off, right? Both of them sell off after that, right? So both of them sell off from here to here. We get a sell off. I'm over exaggerating, right? We get a sell off from here to here. Right? ES makes a new high. ES make a new high at the 12 o'clock candle. At the same time, at 12 o'clock, NQ is making a high. But NQ high never takes out this high. So either you taking the sell on ES or NQ, and you can say, all right, if we don't take out the high that like if we don't do the same thing that ES did, ES made a high, then made a new high. NQ made a new high, made a lower high. Probably means that ES is going to sell off. It also means that if you want to take NQ, you have logic to set up the sell for NQ, because if we not making the same kind of pattern where we got NQ making a high, making a new high, right? We are making a high, making a lower high, sell off. This your sell right here. Or if you're not sure about it, this your sell right here because it's lining up with this high. That will help you get extra confirmation because this play, the divergence has been really, really playing out in all the pairs on NQES and YM over the last couple months. Like that's been the divergence play has really been the one that's really been kind of, it's always been the case, but it's really, really like playing out. Same way over here, if we look at this low, right? There's a low on ES. There's kind of a low on NQ, the same time frame right here. ES sweeps the low right here into a fair value gap. That's also extra confirmation. We got a low right here. The same low over here, same time frame. This 1900, this around 1900. And Q doesn't take the low. It sets an equal low. Seeing that should tell you, all right, if NQ not taking the low, ES, even though it made a new low, is probably going to keep going. So if we do that and we know we inside of a fair value gap, that should say, hey, NQ doesn't take the low. NQ takes out the high, takes out the high, takes out the high. That means we can probably get a setup for a buy inside of this fair value gap or somewhere near the fair value gap to target for this high. Because eventually it does go ahead, take out the same high over here as it does on ES and NQ. So going into next week on YM, right? We look at the daily on YM. I'm jumping over here now. We look at the daily on YM. We just took this high out. We retraced a little bit. We set a new all-time high. We got this candle will probably be acting like an order block on the daily. And then you'll see on the lower time frame, if we go to the 4 hour, it's just chop back and forth, chop all the way over here. But when you get to the 1 hour, you can see we got a gap right here, liquidity right here, another gap right here. So this area right here, this fair value gap right here, will be where we need to say, all right, if it don't go get above that, we could see sell off, right? But if we do, then we know that there's going to use that area to buy from to go ahead and take that high. Then if we sell off, this is going to be the first place it try to buy inside of this fair value gap. So if it does buy from here, we can buy inside of this fair value gap. If it doesn't buy inside of this fair value gap, it should use this to go lower to take this low out. And that's basically what these drawings are. These drawings are basically the same thing I just said, right? If we buy, we may try to sell off here, right? That's where this move to the downside says. If we buy and we sell off, it should happen here. We'll go ahead and target these areas all the way below us, right? We'll target this level inside of this fair value gap primarily, right? If we do buy and we decide that we want to use this to buy from, it'll probably try to sell off, sneak outside of it, and then use this to go ahead and get above these highs, right? Then the other scenario is if we sell off, we use this area to try to buy from, and then we buy up from there. So I drew all the scenarios that I think we can deal with this week, but you have to wait for confirmation inside of either this bearish fair value gap or this bullish fair value gap to decide which setup to take. But these are primarily what I'm looking at, whether we buy and use it to the upside, whether we buy, sell off inside of here, whether we sell off and try to buy inside of the fair value gap, or we sell through this and then use this to buy up. So that'll be what I'm gonna look for on each one of these setups for YM.
Hey, Corey, question with that. Is it possible that it can buy up, like you said, first, right? Drop down and then hit the fair value gap and then buy up? Or will it kind of
Yeah.
always keep that same rule of thumb? Like,
That I've already accounted for that, right? We can buy up, push down, and then buy up from there. And I, even though I didn't draw this directly on the chart, that's kind of what I'm saying with this move right here. Like we could buy up, push down, and then this could be our buy where we pushing up.
okay. Yeah. Okay. Okay.
Anywhere inside of here,
Here. Gotcha.
I'm kind of saying the same thing because if you again, just like over here, this was a fair value gap. Oops. Let me clear this. It's the same thing I'm saying that happened over here. Like it's the same setup right here, right? So fair value gap, fair value gap, bearish fair value gap, and it's basically the same thing. If we were looking at like this day, where we either gonna come in here or we gonna sell off or we gonna push down, try to buy, or we gonna push down, use this to go lower. And until we get to another point of interest right here, which we did, we got to this. And then once we got into this, it's either we gonna use this to sell off from to go lower, or we're gonna use this to push up and go up higher. And that's what we did. We went into this, we tried to buy. So from this high, we went down into this area. We tried to buy on this move, right? We tried to buy. And we pretty much got to this bearish fair value gap. We missed it, but we pretty much sold off where the high almost tapped it, right? And then once we got into this, we sold off, right? And then we came all the way down to another point of interest right here. So now the cycle starts over, right? We in another strong bullish point of interest. The cycle start over, right? So now you are saying to yourself, do we, once we get down here, do we trade through here and buy up? Or do we, once we got down here, do we trade through this and go lower? Because we got liquidity over here that we could be targeting. We got liquidity that we could be targeting since we traded all the way down here. We could be trying to sweep that. But in this case, instead of us doing this move, we decided to do this move where we bought up, we took this high, came back down, and took out another high right here. And then eventually, where did we come back to? This area. We tried to sell a couple of times. We tried to sell here, tried to sell here, tried to sell here. But for the most part, we stayed above this area right here because there's a little fair value gap right here. And this is where all our lows are. This low happened inside of this fair value gap right here. And this low happened inside of the fair value gap that's over here. And then once we got back to it, once we came down into this, that's the fair value gap. Then it is the same thing over again. From this high, do we trade off of this and bounce up? Or do we trade down through this, use this to sell off to take out this low because there's liquidity. There's liquidity here. There's liquidity here, right? The cycle repeat itself. So now that we here and we get to this point and we just traded to this fair value gap and we decided, hey, we're gonna bounce up. The first high is this high. The next high is this high. And then we still got this area. And then once we get into that area, which we did right here and right here, and then eventually all of this price action is how do we handle this area right here? Once we get above this, then you can start saying, all right, this is inverted. This is inverted. There's no longer a sell area. Where this was selling, this is inverted. I can look for it for a sale, but now I've already hit it once, twice, thrice, four, five, traded through it, all this price action. And now this ain't strong for a sale no more. So once we get above 46.86, which happened right here, they use it to buy from. All of this is buying from this area now. Goal is take out this high. We take it out. Now, if we ever came back down into this area again, we know it's not a sale area no more. And unless we create something new, which we did right here, and we trade through that, that's when we can say, all right, we could possibly get a sale. That's why I say we pushing down first, then we sell below this, because that's the new sale area if we get below this. This is the premium sale area. If we get it to this area, right? If we get to this area, the only place we can look to sell from is this, because that's the most recent area to sell. That's the same place we sold off to make this high valid. Is this area. The last place we looked to buy from was this area. And we look to buy in here as long as we stay above 46,899. If we get inside of here, we should see an attempt to try to buy from the high, middle, and the low. And that's where we can get our setups from, high, middle, and low. If we try to sell, it needs to be inside of this fair value gap where we try to sell at 47,174, 207, or 239. If we get above this, then you can start looking at, all right, maybe we not ready to sell. And if we get above this and we haven't taken out this high, then you could be like, all right, if we're above this and we traded through this, and I start seeing price stick around in this area, it's probably not going to sell off. And then I can start looking for this to buy off of this level, just like we did over here, right? We got into this area right here and here, and then it just started trading, chopping through it. And instead of it selling off from here, use this same area to buy from to take out this high. You'll see that happen all the time, right? You'll see it happen all of the time because that's really how price mostly moves when you're looking at fair value gaps and order blocks and all that good stuff. You'll see an area that's supposed to sell off get traded through. And then once it gets traded through over here, they'll come back and use it again to buy like they did. Like this area is the same place this low is, right? And the only way you know that it's not valid no more if you get a new one to replace it. So this was a sell. This got replaced by a buy. They came down, used it again, took out this high, took out this high. Now, if I'm going to use this high to buy, I need to see a fair value gap and I need to see the high getting taken out. We don't take out the high. And instead, we replace it with a bearish fair value gap. And we took out a low. So now I could actually be looking for sales again, right? So anytime we come back in here, they tried to sell here, they tried to sell here, they tried to sell here. They don't succeed. We don't take out this low. We don't take out any of those lows. And instead, we use this area again and invert it. This should have been a sell. We should have been selling from here to take out this low, to take out these lows, to take out these lows, but we don't. We muddy all of this up. We just go sideways inside of here until we trade outside of it right here. We replace it. There's a little fair value gap over here. We trade above it. We try to take out the high. We don't. We eventually take out the high here. And we even come back down into it. We hold this little area right here. And then the price go up and take out all of this high. This happen all the time.
But in this situation, if you are looking for sale, as you said, so that is not wrong setup, right?
It's not wrong, but it is, but it isn't, because overall we still bullish. We
Yeah.
took out a daily high right here. We took out a daily high right here. We took out a daily high right here. So
Yeah, but there was like a equal lows, right? So
yeah,
that is good liquidity, means a good area to go and come back from there, right?
yeah, but if you go, this is this the fourth. This the so we're looking at the second, third, fourth, eighth, right? Oops. Second, third, fourth, and eighth, right? This is the daily. So the second, third, fourth, eighth.
There is a FVG that is
FVG
reflecting that.
right
Yeah,
here.
yeah, that is the.
And
Mhm.
it's an FVG. And when we take out the low, we trade back inside the range.
Yeah, yeah.
We took the low out right here.
Mhm.
We took a low out here on this candle.
Yeah.
But the next day we don't take a low out. We don't take a low out. We take a low out on this candle and we take a low out on this candle. But the next day we take the low out and then trade back up. The next day on the fourth, we don't take another low out.
Mhm.
And we still inside of this fair value gap. And it's not looking like it's gonna take this low out. So you still probably should be bullish. But then it go back to what we were saying, like, all right, if it's a daily, what does the 1 hour saying? So on the fourth, we know we in the fair value gap over here, right?
Mhm.
On the second, third, fourth, eighth, all this is still saying we set these lows inside of the daily fair value gap, and we still buying.
Yeah.
If you take a sell and you don't trade below a daily low, you know it's probably not gonna be a valid sell setup.
Mhm. Mhm.
So with our setup today, going into the beginning of next week, that's why if we still kind of in a bullish environment. So if we do, we probably will get some, like, just because of how we closed on Friday, we probably will come into this area. But then we need to start seeing how it react inside of here, especially if we don't take this low out.
Mhm. Mhm.
If we don't take this low out, that's a telltale sign that this is probably going to keep going up.
Mhm.
So let me drop YM. And then,
That's why they call him the GOAT.
Mhm.
hey,
Thanks, Corey.
ES pretty much the same, right? I mean, sorry, NQ pretty much the same, right? We got a fair value gap. It's on the 4 hour. I'm gonna show you. Let's go daily. Let's go daily, right? On daily, inside of a fair value gap. The low we made is right at the pretty much at the in the middle of this fair value gap on the daily. So that means that if we're gonna sell off, it needs to take Friday's low out, right? And if it's gonna continue to sell off, it needs to not only take out Friday's low, but it also need to close below the low. So if we get Monday to start taking out this low, that means that hey, we will likely see the sell off, right? And then if we go to the 1 hour time frame and we take out this low, there's a fair value gap right here. And then there's also one on 4 hour right here. I like the one on the 4 hour because if we take out this one, this low, and they decide they want to sell off, it's going to happen inside of this range. So that means that if we get a sell off, it's going to probably have to look like this. It's probably going to have to go below this, come back into this area, and then go lower. Because this is where we're going to get the sell off from if it does sell off. Just like if it decides that it want to hold this area, we should also probably get a buy to go higher from this area. So you need to be looking at if we take this low out, do we close below it? If we close below it, the probability of this range getting inverted is higher, right? And if we get wicks in this range, that's this setup likely. If we get closed below this area and start closing below this gap, that's where this setup should come up. Because once you see we get closed below this and it inverts, we'll get a new fair value gap to the downside. And then you'll see something like this, another candle like this. Then you'll see the setup for the sell like that. That's what it'll look like. You don't believe me? Look at analyze this same area right here. There's the bullish replaced by the bearish. Once we get closed below, which on this candle happened, we get a wick. There's most recent liquidity. It tried to buy. It used the setup, the fair value gap that it made right here, traded inside of it, sold off. It targeted this low, it targeted this low, and it targeted this low. And we don't stop selling until we get to fair value gap, order block, and then it changes mind down here. But all of that happened at a fair value gap that was supposed to buy, that got inverted, got traded through. A bearish fair value gap was created right here. A low was set right here. After the low was set, we traded back into it as if we were going to buy. And then we sold off right here. It even happened again. There's another little gap right here to go ahead and take the rest of this out. So we need to see the same situation. Either we're going to buy here, hold this and push up, push down a little further and push up, or we going to push down, trade through it, sell off. Or we going to push up into this area, which is a fair value gap, either trade through it to go higher, or we sell off from there and maybe we hold again inside here, which is why we got these setups. So if we push down, we sell off and trade through this. If we push up, we maybe hold inside of this and sell off from there. If we do sell off from here, we still need to look at this area to see how it reacts, right? And the market just opened too. So you can see we pushing up, right? This already need to be where you start your eyes looking at, right? This is a good time to be on the charts because now we're seeing, right? The market want to push up. So that means the first place it's got to stop is this 2504. Peace out, Sheila. First place it's got to stop is here. And then once it's actually in here, we need to see how it reacts to it. So we already got some information, right? First piece of information is the market is opening up positive. And if it's positive, the first stop it need to make is inside of here. And this is the first decision area. If it does push up and go into this, how does it react? And once it gets in here, how does it react and what do we do inside of here? This is EQ. So we already got some information. Oops, that's NQ. My bad. We already got some information. The first piece of information is the market is opening up to the upside. And if it stays like that, how does it react when it gets inside of here? I'm going to put an alert right there because I want to know what happens when it gets inside of this fair value gap to the downside. Since I know we going up. If we don't ever tap that, then that may give us the logic behind the sale setup. I ain't gonna repeat everything, but in ES look the same way as in Q and Dow. We even got liquidity on the inside of the fair value gap on ES. We got the same fair value gap on the top side as we do on NQ and YM. We got the same fair value gap on the 4 hour that we got on all. And then we got liquidity here. We got liquidity here. And we got liquidity above the all-time high. The target areas on this are 68.25. I didn't draw it, but that's in between this high and where I think we go. But we got 68.25 and we got 68.50. Because we already made 6,800 right at the all-time high, 68.25 is the likely next area for this to stop, of course, and then the 68.50 area.
So here I have one question. This is FVG, right? Last FVG.
This one?
Yeah, this. So if I take this as a sales setup, so before that, and there is order block, but there is no IFVG. There is FVG in this candle, but previous there is no IFVG. So will it work?
Here.
Yeah.
On the lower time frame, it is.
Okay.
There's one. There it is right here. So we actually got two.
Yeah.
You got this one that got inverted.
So we don't need to consider on same time frame, right?
Mm-mm.
Okay.
You just got to see which one is reacting from.
Yeah, sometimes when I have got this kind of situation, then I got F- IFVG on 1 minute or 15 second, but
Yeah.
not on 15 minute or 1 hour.
Yeah.
So
And you'll notice you miss some setups because of that.
yeah. That's why it means that because again, we are looking for intersection, right? I
Mhm.
IFVG and refugee. So if there is no IFVG, I know this is ICT setup. Means I was doing that also, but since we are considering that IFVG plus FVG, so sometimes I don't get that kind of confirmation.
I like this as a rule of thumb. That this the way Kyle of J Capital explained.
Mhm.
If it's on the daily, look on the 1 hour. If you seeing it on the 4 hour, look on the 15. If you
Okay.
seeing it on the 1 hour, look at the 5 minute. If you
Mhm.
seeing it on the 15 minute, look at the 1 minute. That way you got like a set of rules to know like if I see it on these higher time frames,
Mhm.
go to this lower time frame to look for my entry, right? So in this case, this is a 4 hour,
Mhm.
right? I'm sorry, a 1 hour, or is this a 4 hour? Maybe I drew this. Yeah, this is actually a 1 hour. This is actually a 1 hour fair value gap. So because it's a 1 hour fair value gap, what do you say? Go to the 15 minute, right? I mean, for the 5 minute, right? So on the 5 minute, we can see not only do we got a fair value gap here, but all of this inverted area.
Right, right.
There's two inverted fair value gaps.
Yeah.
And if we looking at those from here, we could draw it up from here all the way up. There's one right there, this one, there's that one, or we could just combine this, or we can combine all three of those right there on the 5 minute. This is the fair value gap. So you know we at least coming to the low,
Yeah.
and then you get your entry off of this range right here. This is where you get your entry from. It's anywhere in between here. Let me hide this big one. Now you know, and like, all right, this
Yeah.
inverted.
Mm-hmm.
That's the fresh one right here. When price come in between the low, middle, or high,
Yeah.
it comes to the middle. You get your setup from here. It
Mm-hmm.
sell off.
Yeah. Mm-hmm. Got it.
So I like his rule of thumb. I'm gonna apply that
Mm-hmm.
going forward.
So
I'm a
his name is J Cap, right?
J Cap. Yep. But his real name is Kyle.
Okay.
His name is Kyle. His page is J Capital though.
Okay. Yeah, I'm trying to find on Insta.
Yeah.
Mm.
I mean, the link that I sent should take you to his page.
Okay. Okay.
Yeah, that link that I dropped, I'll drop it again.
Mm-hmm.
I think Christine sent it to me by mistake. Um,
Oh,
and
Corey, when you get a minute, may you please also send the earnings whisperer link because I had it, and then when I try to pull it up, it's not doing it.
the earnings whisper. I don't actually have the site. I just go to Twitter and get it off of there.
Oh,
Yeah, yeah. I just go to their Twitter account because I didn't want to pay for it.
oh, you have to pay. Oh,
Yeah, yeah, yeah. So I just go to their Twitter page and then they always post it right here, the earnings for the week. So whenever y'all see me post that in the Facebook group, I'm just getting it from here.
okay. Thank you.
Matter of fact, I'll drop this in the Facebook group too. Just the earnings for this week, and just I just try to make sure that like we don't even really have none for this week, so not a lot for this week. So let's do a paste. Oops. So yeah, this when I'm dropping that, this is all I'm doing. I'm just pulling it from here instead of going to the actual site itself because I don't want to pay for it. And I mean it's worth paying for it, but like why? I don't have to own every single thing,
Mm.
when I can get the same information I need over here. But that's also why I picked Delta because I know they got earnings coming up on Thursday. So, that's why I went with Delta. That's my main play on Delta this week is them. I could look at Levi's too. I don't think that's a bad play for this week because it's, a little interesting or whatever. Um,
Corey, have you heard from Jason?
Jason, no. Other than it was his birthday the other day.
Oh, okay.
He posted it on social.
Okay, so he's doing okay. Okay, cool.
Yeah, yeah. I hadn't talked to him though. Usually we'll send each other some memes or something, but um, yeah, I haven't talked to him personally. But this is yes, this is ES. All right. So I guess I'll leave the last couple minutes open for just Q&A. I kind of probably answered some questions already, but I mean, if you got anything else, just let me know.
One thing, like when we see like open, high, low, close, right?
Hmm.
Or there is so how do you see that on daily time frame or 4 hour? Means if that is open, if situation is bullish, right? So it should be open, low, high, close.
You talking about like how I should consider like if this was
Yeah.
4 hour.
Uh-huh. Means if we are considering for any daily candle, then how does it work on 4 hour?
The same way. So,
Like if
just like we
mm-hmm,
just like on the daily, right?
mm-hmm,
I'm getting my direction on the daily.
mm-hmm,
I'm saying, right, we're at a high.
yeah,
We just took out a high, right?
mm-hmm,
But when we took out this high, we didn't close above it. We end up closing in between the
inside, yeah,
days, right?
mm-hmm,
This put us at a 50-50 point because
yeah,
we closed in between a previous day candle, right?
mm-hmm, mm-hmm,
We didn't take out a low and we took out a high. So
mm-hmm,
kind of this 50-50, but it's more bullish because we took out a high, right?
yeah, yeah,
If we look at the day before that, right? The day before that opened up, it pushed down into the previous day, but it took out a high, right? On this
mm-hmm,
candle.
mm-hmm,
And on the previous day, it's a engulfing candle that also took out this high and this high. So on the 4 hour, if you're looking at the 4 hour and you're trying to do the same thing, right?
mm-hmm,
First thing is this is the biggest candle within the last couple of times range, right?
mm-hmm,
So the first thing you got to know is if we actually bearish, we would have to take this candle out, right? So if we come down and we start seeing, all right, we made a low here, we made a high, but we don't take out this low. We made a low here, we took out a high, but we don't take out this low or this low. And you got to go through that process of how that works throughout the 4 hour time frame, just like you
mm-hmm.
would have to do this on a daily time frame.
No,
And
I got this thing. Means my question is like if on daily we are assuming like a bullish candle, right? So open low means when at 6 p.m. it's opening, then first Asia should be low, right?
oh, you talking about like power of three. So like,
Yeah, yeah, yeah. Power of three.
right, right, right. And then let's look at it over here.
Mm-hmm.
So you're saying like, all right, my candle opening is like here.
Mm-hmm.
If I'm saying that this is gonna be, a bearish day,
Mm-hmm.
I need to see price push up above, do something like this, and
Mm-hmm.
then come back below the opening.
Yeah, I know. Yeah, yeah.
And then maybe you do something like this, test it again, but the close should be somewhere like this. So you saying
Mm-hmm.
this should be my open, high,
Yeah,
low,
and
close,
then
right?
yeah,
That's what you're saying, right?
yeah, yeah.
You're right.
Mm-hmm.
Um, you can look at it from the actual open with
Mm-hmm.
right now.
So open, I mean, 6 p.m. is good enough, or 12 a.m. or 9:30.
It,
Which
it depends on what's giving you the best setup, because if you're looking at ITT,
Mm-hmm.
tell you that the 6 p.m. open doesn't account for the algorithm, right?
Yeah. So according to him, 8:30 and 9:30 is the opening time.
It's 12.
Mm.
It's
Sorry.
midnight. The
For,
opening for him is the midnight candle.
no, sorry. He considered both. Like for New York session, he considered 8:30. So because I do New York, so I consider 8:30, right? So mm, should I consider 12 also?
Again, he always considered the open to be at midnight.
Okay.
So if he was looking at this, his opening would be right here,
Mm-hmm.
and he would be looking at price, all the price that happened after that,
Yeah.
to
Mm-hmm.
get the same information. And if you looking at this, the way that the price been moving,
Mm-hmm.
his opening candle on this day would be here.
Mm. Okay. Okay.
Price push above, he get the setup for the sale above the opening price, and then you get the sell off from here. And you looking over here, the candle is here, price push below, he looking for buy below. But to me, it's a
Mm-hmm.
little, this works, and you can also look at the actual opening too,
Yeah.
because I look at the daily opening and I look at the midnight candle open.
Okay. Okay.
I look at both of them.
Both. Okay. So yeah, I used to consider that 12 also, but thing is like uh, few days ago, like I was a little confused about bias.
Yeah.
So I was trying to implement this concept, open high. So if like sometime like you are expecting the next day should be bearish, and if it open and move low first, right? So move low first, it means it is changing bias. So next day will be bullish, right?
Mhm.
So I was trying to that implement that, like if I can see more clear where is price going after 9:30.
Yeah.
Mm-hmm.
What typically is, like, if you see low volume anyway, like
Mm-hmm.
you see right here, is you're not gonna get the information you need from it. Or
Right.
you see like this day, like this was just low volume chop all the way through.
Right.
You don't really necessarily get all the information you need from this, because
Mm-hmm.
you're getting a bias from that. And it's not so much to use it as a bias, but it's like if it lines up with what you see,
Mm-hmm.
then you can use it. So like to this day, midnight candle don't really do nothing.
Mm-hmm.
But you do see price trading below it and above it, and it's just chop.
Yeah.
You wouldn't even really want to use anything on a day like this.
Mm-hmm.
Not really giving you anything to trade off of. But like on this day, we got the midnight candle and the daily opening candle right here.
Mm-hmm.
If you're using this and you're saying, all right, 9:32 a.m. and you trade in London, you see price below the midnight candle
Yeah.
holding, I can use that, because if I don't get it down here, I can get it once it closes above midnight candle.
Right. Right.
And it works. Or even I can get it at the opening and it works either way. But
Yeah.
it's just something I'll use. I don't really like use it all the time, but I'll use that if the markets are kind of slow.
Yeah, like as you said, like you should have multiple whys, right?
Yeah.
Someday something is not working. So
Yeah.
same like I did my setup, like how many setups I can do, right? So but
Hmm.
sometimes some is working, some is not working, right?
Yeah.
So
Yeah.
you need to have at least 4 5 strategies. So
Okay.
at that time exactly what is working, so you can work on that, right?
Yeah. Yeah. Something just.
Mm-hmm. Thank you.
Oh, NQ. So we inside of NQ fair value gap.
Yeah. Allowed can.
So we already in. So now, all right, we ended on the 1 hour. Now we drop 5 minute. From the 5 minute, how do we react? I don't know if it's gonna give me time of day right now at 6:20 on Sunday, but I want to see how it react inside of here if it's gonna sell off. And what I'm gonna look for inside of here is a bullish fair value gap getting inverted for a bearish fair value gap inside of there somewhere. So this setup is what I'm gonna look for inside of here. That whole setup
For sale, right?
or a sell for the first attempt.
Yes.
I'm gonna look for this where we got a bullish fair value gap that tries to get bought up right here. It doesn't work. It doesn't take out this high, and then it replace it with this bearish, and then we get price trade back in, and then it sell off. If I don't catch it up here, I can catch it inside of here when we get the break. And I'm looking for that all to happen either at this level, or at this level. We already got a gap and a fair value gap right here. So how do we react to this? If we go, we buy up. If we don't, we trade through this, use this same area right here to sell off from and go lower. So it's the same thing that we looking at on the higher time frame, but we looking at it on the 5 minute. And we got clear rules to follow as to how this should set up. So even now, I'm gonna set an alert here. Maybe I will trade tonight. I don't know. I'm gonna look at it. The next place I'm gonna put an alert is here. So either we don't get a sell off from here, and if we do, it should come back into this alert. By the time we come back into this alert, if it does try to sell off, I should have my fair value gap to the downside, or I should have an attempt to buy from this area, one or the other, right? If we don't get that, then I know that we are going to go ahead and hit the middle of this fair value gap. And once we hit the middle of this fair value gap, then I'm saying to myself, repeating this same thing. If it's going to keep going, I should have a fair value gap through this little high. And I shouldn't have to come back down, right? I should have a fair value gap through this high. I should have price react to the fair value gap and then go. See you later, Christine. If it's going to sell off from here, I should have inverted fair value gap over here, and then I should have the sell off from here. So now I got this price point and this price point that I'm gonna work with and see how we react. I might just take this because I know I ain't gonna have a lot of opportunities this week because of work, but I know I got my levels. I know what to look for. I got price set up for either direction on NQ. And we also haven't had it happen on ES yet either. So it could be setting up on ES because we haven't gotten to the fair value gap on ES yet. So again, how does NQ already get there, but ES haven't? How does ES and NQ, how does NQ react as we already got there, but YM and ES haven't got there yet. YM is further away than ES is, so ES should be the next one to get inside of this range, along with E and Q. YM will be the last because it's the farthest away, unless price just shoots up for some reason. But if it does, then we need to be curious as to why it's pushing up there so fast. Dollar and gold moving in the same direction. I don't like seeing that, so I can't touch. But you can see dollar already pushing up. So if dollar is inside of that range that I said we could probably buy from already, so it's inverting this area. And if we hold this, that means we should be looking for this high. We already in this, and now this is inverted. So let me change this. This could be 50-50 at this point now. So we just gotta monitor that. But anyway, you know my levels, you know my charts, you got all of them. I'm gonna start sizing into my option plays this week. Um, I'm gonna start with single contract entries unless it's on like a $60 play, I'll buy a multiple on those. But for my $100 plus, I'm only buying one of those. For anything less than 100, I'm gonna buy multiple of those. It may be two, it may be three, or four or five or more, but that's how I'm gonna approach it. If it's above 100, I'm only buying one contract to start. Then I'm gonna wait and see how it moves, and then I'll add on from there. If it's below $100, I'm gonna buy multiple. I may buy one or two, but I'm only gonna buy up to $100 on those.
Thanks. Got it.
Okay.
Okay.
All right, y'all. And I'm doing this in my Robinhood account.
Okay, got it.
So the contracts might be different prices as compared to what we see on here. So just keep that in mind too. So on your Robinhood, this strike price at, let's say, just using this as an example, it might say 36 on the strike price, but this might not be 262. It may be 269 or something, or it might be 258 or something like that. But it's still that contract price. The strike price is what you got to look at. Okay?
Okay.
But that will not be bigger difference, right?
Shouldn't be too much bigger. Yeah,
No,
shouldn't
okay.
be too much bigger.
Mm-hmm.
Maybe like a couple cents or something like that off.
Got it.
Yep.
Yeah.
Thanks.
I'm gonna try to take an option trade this week.
Okay.
All right.
All right.
All right. Thanks.
I'll get this video up. I'm gonna try to take off the beginning. Like, we don't need the mindset on this, so I'm gonna clip the video a little bit, do a little editing, so it'll probably take a little longer.
Oh, no worries. Thank you.
I don't want everybody business on YouTube, so all right, y'all.
Thank you.
Peace.
All right. Thanks, Warren.
Bye. Bye, Ari.
Bye.
I know you had a good game.
Yeah, team won.
What? How many points you had?